Okay, so this is GBP USD non-farm payroll report. Monday the 3rd of October is the week commencing and it is Friday today. Non-farm payroll came out at 1:30, I believe. I don't really look at news, it's a fucking load of shit. But we are on a weekly chart. Hang on a sec, let me just make this a little bit bigger. I don't know if it makes much difference to you, but yeah, so looking at pound on a weekly chart, you can see this little gap. So we've got a little gap right there. Expected to trade back up into that, especially after taking out the 1985 lows last week. We wanted some sort of reaction higher. Where was the PD raise above price? This is a weekly bearish order block right there. Let me just mark that up for you. Weekly bearish order block. So we hit that. Let's see what day we hit it on. Look at the bodies there. Look how accurate that actually is. And yeah, so it's Friday, so Monday, Tuesday, Wednesday, Thursday, Friday. So Wednesday again created the high of the week. What I'm going to do is I'm going to check for Euro USD SMT. I think there actually was. Let me just take a look on my other screen at Euro USD. Yeah, so here, GBP USD made a higher high, Euro USD made a lower low. So that's SMT. So that confirmed the reversal around this point. I never actually got in. I predicted it in my group. I remember I called the shorts, but we didn't get that tag on the actual entry. So yeah, that's the weekly bearish order block, and we hit it in the right time. So we hit it on the Tuesday and Wednesday. So what I'm going to mark up right here is 2 seconds. SMT with Euro USD. You don't need to know what that is if you don't so far. I'll teach it in the group at some point. But it's basically a confirmation, especially at a PD array. I'm going to mark up the week. So we started on the 3rd. Where am I? Monday the 3rd. Monday. Friday. Okay, so what I would like to say is that Wednesday New York session, so I'm going to start New York about there. After that point in time, we do not trade at all, because from here it's anticipation of non-farm payroll, and when non-farm payroll actually comes out, it's manual intervention by central banks and all that shit. So I'd rather stay away from it. But if we was to actually map it up, we had the Wednesday high of the week. Thursday retracement back into the weekly range. Look at that delayed protraction again, if you know what that daily profile is, on a Thursday. And yeah, so we expect Thursday low of week, but because of the non-farm payroll, we can reach outside of its normal parameters. But so if we was looking at the actual model, you can see, if you're familiar with market maker models, you've got your market maker sell model, your smart money reversals right here. Once that low is broken right there, breakdown. And then we had another round of consolidation, and then today, well, yesterday and today, that was our next one. So your original consolidation is right there. So if you just want to mark that up. So that's our draw on liquidity, if you like. And I'm going to get rid of these boxes as well because they're quite confusing. But market maker sell model, weekly PD array, Wednesday high of week, SMT Euro USD, smart money reversal, Thursday delayed protraction, Friday non-farm payroll. So see this little gap right there? That is a premium fair value gap in from that high to that low. Came into that today. Let's have a look on a lower time frame. So hang on a second. What I'm going to do is draw on. You see these equal lows? That low and that low right there, relative equal. That's sell side liquidity. Sell side liquidity was looking for. And when did non-farm payroll come out? Let's take a look. 8:30 New York time. NFP. Okay, so that's your hourly fair value gap. Let's take a look at the daily open price. The daily open price was right there. Okay, so we ran up into that gap today, and then as the news came out, this massive drop, we had that premium array from that high to that low, premium fair value gap. We also had, if you look carefully, these highs are relatively equal. So I'm going to mark that up as buy side liquidity. So we ran into a premium. Why is it a premium? Because of that high and that low, as I said, and also above equal highs just before the non-farm payroll. So people that were selling this have been taken out. Smart money starts the shorts right here. Stop to a 5-minute chart. Time and price with news as well. Also, if we want to move this over as well, just before the news release, we tend to get a run on stops right there. See how we nudge that high a little bit before dying? And also, if you look here, that little gap right there, that's your entry short if we were to trade non-farm payroll, but we don't do that. So ran into the high, ran it out one more time, broke down. That little breaker structure right there is the ICT market structure shift. So highs taken, swing low, premium fair value gap, buy side liquidity before news. That right there is your short. So if we was to sell there at the news, which we'd never do, because of the manual intervention that goes on, and it's not really accurate. The stops above the high just there, so tag that to the high. And then we have relative equal lows that we're going to run for. So notice how we take out buy side, start selling to the buy stops, fill in this gap, break down, and then exit smart money's positions down here. We can get in with them. Sell it short. You can use your target. You can literally just target the low if you want to be safe. This is a 1 to 6 risk reward. That is a ridiculous risk reward for a non-farm payroll. So that's my little review on non-farm payroll. We just monitor this. We do not trade it. Let's take a look at a 1-minute chart, see if there's anything else. See a little gap right there. That's another possible entry if you're a scalper. But I wouldn't personally be taking anything like that. So yeah, that's my review on non-farm payroll.